This is the daily Forex news report for FCTO The US dollar weakened against commodity currencies and softened a bit against European majors as the Dow Jones jumped to close at a record high of 14,253. Investor sentiment was solid on expectation that the Fed will continue its easing efforts after recent speeches by Fed Chairman Ben Bernanke and Vice Chairman Yellen. But the overall impact of risk sentiments on the currency markets was rather muted, as it has been lately. The euro is stuck in a tight range above 1.3 against the dollar for the moment, and even the sterling was limited well below a near-term resistance at 1.5221 against the dollar. Also, US dollar Canadian dollar is holding well above the 1.0216 minor support, and there is no sign of a steeper sell-off yet. Japanese yen crosses were also stuck in range. Recently, both Bernanke and Yellen have sounded dovish and defended the Fed's open-ended asset purchase program. Bernanke stated that the Fed would continue purchases until it observes a substantial improvement in the outlook for the labor market. Yellen also said that she still saw the balance of risks, calling for highly accommodative monetary policy to support a stronger recovery and more rapid growth in employment. Last week, Chicago Fed Evans warned of the danger of removing accommodation prematurely, though Richmond Fed Lacker warned yesterday that small mistakes in timing the Fed's exit could have large consequences. After all, Bernanke has emphasized he has backing from the majority of Fed policymakers on continuing the stimulus. Australian dollar and New Zealand dollar are the strongest performers this week so far. The Aussie was supported by solid economic data this week. Australian gross domestic product grew 0.6% in Q4, in line with expectation, and overall growth in 2012 was at 3.6%, the strongest pace in 5 years since 2007. Treasury Swan hailed that Australia's around-trend growth rate over the year is more than 4 times the Organisation for Economic Cooperation and Development's average. And he said that the country has managed to achieve solid growth in the December quarter at a time when around half of all advanced economies contracted, including 5 major advanced economies. However, some economists pointed out that the details of the GDP report were weak as domestic demand remains below trend and the growth was too heavily dependent on exports. At his last government work report, the Chinese premier unveiled that the government retained its GDP growth target of 7.5%, but reduced the consumer price index target to 3.5% from 4% last year. This was compared with the People's Bank of China's Deputy Governor's CPI forecast of 3% in 2013. The report showed optimism over the country's economic outlook, while the economic